Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome to the show. My name is Al Gordon, and as always, we're working on your financial freedom. On today's show, we're going to talk with some Lifestyles Unlimited members who live in the greater Dallas-Fort Worth area. And the reason we're going to talk to them is because they're probably going to tell you something that's going to resonate with you. I'm guessing. I'm seriously guessing here. But I think that when you hear TK and Amrit's story, you're going to go, you know what? I know exactly what they're talking about. I've been there. I've done that. And they changed their life. Maybe I can change my life too. And that's part of the reason why we're bringing them onto the show, is specifically so that you can hear the story of two people that were doing everything they were told to do in life. And they got to a place in their life where they realized something just wasn't working. And they looked into real estate investing. And as they got involved with real estate investing, all of a sudden, their life started to change. Things started working in their favor. So what I'm going to do right now is I'm going to invite and welcome TK and Amrit to the show, because I want you to understand that there is a different path that you too can follow. TK and Amrit, how are you guys today? How are you?
Oh, good. We are doing awesome. It's so much honor to be on your show. Thank you so much.
Well, it's such a pleasure to have you guys on the show, because I think you're just like everybody else in this country. You were doing everything that you were told to do to become successful, were you not?
Yes, definitely.
So where did all that influence come from? Was that from your parents? Was that from like teachers? I mean, who was framing what success was supposed to look like for you guys?
The whole environment, teachers, parents. We come from like I would say, middle-class background where our parents did job, our grandparents did job, so that's our mindset as well. So I was also working as an IT professional here, but then I took a break to take care of my kids. But after that, I did not want to go back to the job thing. I was like, this is not, I think, what we are meant for. So I started exploring the opportunities, and I found about lifestyle, and it was really attractive. I was like, wow, exactly, it sounds what I really wanted in my life. And it just gave me all the time back what I wanted, and it's like something, it's like I never ever dreamt of being like in real estate, to be honest. I was like, it's not something I can do, but with lifestyle, it's like, it made me like feel really confident that yes, it's possible. Anybody can do that with the right guidance. And that's what lifestyle did for us.
So Amrit, when TK came up with this crazy idea to start investing in real estate, I mean, were you supportive, or did you think she had lost her mind?
No, that's a very, very interesting question. So when she said at one day that we, like TK said, she was working as a full-time in an IT job, and I myself holds an IT job. So we both were working 9 a.m. to 9 p.m. As you know, IT jobs are no more 9-hour jobs. You can have call anytime. So we were always thinking, okay, we both of us are going to be focused how the family is going to run. And then she took a break, and she came back. She started looking into ideas. So we used to discuss a lot of potential ideas. She used to come even more crazy idea than this before. Why don't I open a Montessori? Why don't I go and own this restaurant? So much stuff she was exploring. And then we met one of the lifestyle lead. He actually was my colleague in the company I work for now, and he retired in such a young age. So we were kind of we never heard of somebody retiring so early. So we had a meeting with him. So he walked through the model, and immediately TK was like, "Oh, this is something for me to explore." And then we have more meeting with some other needs from the lifestyle. And when we went for a 2-day training, and it was pretty clear that that's something she really wanted to do.
So as you guys are sitting through the 2-day training, we call that obviously our financial freedom course. What was going through your mind? I mean, were you transforming your mindset to accept all the concepts that were being addressed? I mean, were you just drinking it in like a fish, or were you still a little resistant to some of the things that were being discussed?
So our advantage was, since we met the leads and we knew the person who actually have joined and worked the model, so we had a very good idea of what to look forward in the training, and this is real. I can imagine if somebody does not know Comfort 2-day training, he will have a lot of questions, a lot of suspicion, and so on. But for us, we had that advantage that we had somebody who actually told us a lot about it. And when we went through the 2-day training, it was kind of a new experience altogether, because now we are not just looking at a very high level. We are going deep into, okay, how does the model work, how to look for the numbers, what the NOI means, how does the real tax helps, and so on. And we both coming from an engineering background, we are always attracted to numbers, and that is something which we could really gel into our minds that, oh, okay, yeah, that makes sense, because it is something which is possible. So at the 2-day training for us was more information, kind of reinforcing what we did, and by end of 2nd day evening itself, we actually signed up for the as an effort member.
So you guys pretty much knew that you were going to get involved with multifamily investing.
Yes.
It gave us more confidence and more clarity on the concept, yes.
Well, that's awesome, because I'll tell you what, when we come back from the break, we're going to talk about the path that they followed. And you're going to be amazed to hear some of these results. Stick around.
We're back with the Lifestyles Unlimited Real Estate Investor Radio Show. We're here to answer your questions and help you become financially free.
Welcome back to the show. So if you're just joining me, I have TK and Amrit on the show with me. They are very successful Lifestyles Unlimited members. They're invested primarily in multifamily apartment communities. And part of the reason for that is they had an opportunity to meet members of Lifestyles Unlimited who were investing in multifamily, and they kind of, asked them questions, because it's okay to ask people questions. And they received answers to the questions that they were asked, they were asking. So anyhow, this went down the path of them deciding to come check out Lifestyles Unlimited, and they became members. They went through our 2-day financial freedom course, and in that course, we teach you everything that you need to know to be a successful investor, both in the single family and the multifamily space. And when we're done teaching you everything that you need to know, you go to work putting together your business plan. So, TK and Amrit, you get out of this 2-day. What were you all focused on for your first investment? What made the most sense to the both of you?
When we came out of this 2-day training, we kind of, we got a very good sense of how the overall structure works, what's the working model. We immediately started looking for our opportunity to do a passive investment. And in this, we started looking at the various offering at the time. We learned how to evaluate an offering, which means what is offered by the lead in terms of returns, in terms of the assumption made in the deal. We got a training on how do we look into the various aspects of that deal so it meets our criteria for investment. So 2 months into joining the Lifestyle, we made our very first investment. That was for a deal in Irving. It turned out to be a really good deal, which we invested.
So you guys selected passive investing as the first modality. Why did you choose the passive route?
Our thinking was that since we were coming in new, having no real estate experience whatsoever, not even a single family, so we were coming in brand new. Before we jump into lead, we obviously had to go through a lot of training. So Lifestyle offered a lot of training material as well as the training courses. So while we were going through the training process and having a discussion with our mentors, best way for us to also learn more is to join as a passive investment. That thereby you can see the very first hand how the whole thing works. Because now you are not actually on a lead side, you are on a receiving side, and you could see what are the various documents which has to be produced, how the deal has to be positioned, what to look forward in order us to position this at some point in future. So we use this opportunity for us to learn more about lead, but use passive as a starting point, just to get experience for the receiving end.
So how many deals did you guys get into initially?
Initially, we invested, total we have invested right now 9 deals as a passive investment, 2 as a lead. So we started, that year itself, I think we did at least 4 deals as a passive investment. And we got certified as a lead by end of that year. This is 2019. And then we started looking for our very first property. And it took us time because we want to make sure that the deal we're looking for is good. It meets our criteria in terms of return, in terms of location. So we did 5, I think, if I'm not mistaken. At least we did 6 deals before we did as a lead.
What was the motivation to get involved with lead investing? In other words, putting deals together so that other Lifestyles Unlimited members could invest with you. Why step away from that purely passive form of investing?
So the main, like TK said, she was looking for something not IT, and this was an opportunity for her to start exploring the real estate. We enjoyed putting the lead together. We saw how the model was working, and given the education, we were very sure we can actually do it. It kind of adds to our overall plan that at some point both me and TK need to retire. So that was our thinking, that we go a lead route, pull together a deal, and since TK is not going to focus on IT anymore, so this is something she really wanted to do.
All right, TK, the microphone's right in front of you.
Yes.
When you were doing your very first lead deal, I mean, you've been passively investing and you've seen great results. Now you're going to take the bull by the horns. Were you at all nervous?
Nervous, I would say, in a good sense. I was more excited. It was something very new and very, with the help of mentors and with the support of Amrit, and everything actually just went through. But it was really, really exciting, yes.
Was the excitement... I mean, I guess what I'm trying to do is I'm trying to get inside your mind. I'm trying to understand that emotion, because in my mind, I would think that excitement has to do with the fact that you're forming something with your own hands. You're building a business. You're doing what you want to do, as opposed to what you had been doing in the IT world, where you were being told what to do. Am I even close?
Yes, it's like something being possible, which I thought was impossible.
Wow. You just said a ton right there.
Yes. So exactly that's what my feeling was right that time.
Wow. Okay, so you're breathing life into this brand new business model. You're a little nervous, but you're really excited about the opportunity, right?
Yes, yes.
Okay, so how much time did you devote to finding the right deal?
We did it took us like a couple of months because we had a checklist. See, we have this habit of putting everything down so that we have more clear picture. We write everything, we make points and everything, and then we wanted to make sure that everything gets into our checklist, what the property we are looking for. And when the criteria matches, then we went through it.
So what exactly was that first deal?
So the first deal was like more we wanted a nice neighborhood, not a very old property and not very huge because it's our first time. So wanted to be a little, I would say, a bit reserved with going like big. So just want to have like first-hand experience first before we step into like a bigger thing. That's it.
That makes total sense. Now, I happen to know that you bought a 68-unit apartment community, and a lot of people would say, well, that's not very small. Well, stick around.
We got that a lot.
Yeah, we're going to get the feedback on that. Stick around.
Okay.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. All right, so we're going to get into it in this segment. We're going to talk about the first deal that TK and Amrit put together as lead investors. Now, this is a 68-unit apartment community. And, you know, TK she'll be humble and she'll tell you we were looking for something small. And okay, technically 68 units is kind of small when you look at the average size of a Lifestyles Unlimited deal. So I will grant you that. But 68 units is fairly significant because it is 68 living units. And some people might be a little concerned to step up to something so large. Some people might want to start with something smaller like 6 or 12 units. Not TK. She wanted to get into the game and she wanted to penetrate into the market as effectively as she could. And this particular deal, opened up all of her possibilities. So TK, tell me a little bit about why this particular deal. Was it a value play? Was it a yield play? Was it something in between? Give me all the particulars about why this was the right property for you and your family.
Okay. We were looking into a lot of different type of deals, like from 12 units to 30, but we spoke to a lot of other lifestyle members and mentors. Somehow staying between 50 and 60 units, 70 units made more sense to us. It's because we wanted to go big, but not very big, so a little bit reserved. So this number makes more sense to us. So we started looking, and with a nice, good neighborhood where it's not like too, more family-oriented neighborhood. That was my more criteria, where we can add some more value to it. And then we started looking, and we find this property, 68-unit property, pretty good. When we went there, that whole thing made more sense. My gut feeling, it says like this is it, and that's how it's all started.
When you first toured the property, Was
Yes.
the property in pretty good shape? Did it have some physical problems? Did it have operational problems? What were the things that really made you focus on wanting to acquire that property?
Yeah, so when we first saw the property, we quickly saw that it had an operational inefficiency. So we could see the potential to kind of exploit that to our advantage. And the property was very clean. It was, I would say, they did a good job in maintenance, but of course, they were not keeping up with the market trend. When TK did market survey, it was pretty apparent that it has a potential to increase the rent, but in order to achieve a rent hike, we need to do kind of a rehab or interior upgrades. So we could see through when we walked through that, okay, the property has a lot of potential. If we do a proper job in doing the interiors, we could actually demand higher rent, and which actually worked out since we have taken over. So yeah, the appeal was very nice, very good. The submarket, we spend our time to understand the submarket. We get a lot of guidance from the mentor. Our main key point for us was to increase the operational efficiencies as well as to bring in rehab to ask for more rent and bring the rent to the market rent.
So how has the investment been working out since your takeover in March of 2019? Have you been able to get that property fully stabilized, or are you still working on it?
We stabilized the property in, I would say, close to 7 months. So when we say stabilized, which means that we finish our exterior rehab 100% in the 6 months, and then we, of course, our interior rehab was always kind of phased. When somebody leaves, then we actually start working on the interior rehab. So we keep working on that as of now as well. Our turn was to maintain the occupancy, so we maintain a very close focus on the occupancy, and most of the month we are actually able to keep it at 100% occupied without any concession. So that is pretty lucky, or thanks for the property and on-site staff.
Well, we're going to have an opportunity to come take a look at this property, are we not?
Yes. It's in the master tour, so that property is on the schedule. So we will show what it was. Actually, we have a picture of how it was before, and then we can show what we have done since taking over in March 2019.
So what Amrit is describing to you is something called the Masters Road Trip. And this is an event that we put on periodically, and we usually do it in conjunction with our EXPO. Our EXPO is this ginormous event that we put on annually. Last time we did it, we actually did it before COVID hit. You know, our timing was perfect. COVID came down and we all went into lockdown. Well, now, because the country is starting to open back up, we are going to have EXPO at the Arlington Convention Center on September 3rd and 4th of this year. And in conjunction with our EXPO event, you also have an opportunity to be a part of our Masters Road Trip. The Masters Road Trip is going to give you an opportunity to get on a bus with a Lifestyles Unlimited mentor and an operations consultant and other members of the Lifestyles Unlimited team, and you're going to spend the whole day touring 4 different apartment communities. Now, TK and Amrit, they were gracious enough to offer their 68-unit apartment community up so that you have the ability to go to the property. You'll get briefed by them. They'll tell you about all of the things that led them to acquiring that property. They'll talk to you about what they did to transform that property from what it was into what it is now. They'll talk about the things that they're doing operationally to increase the revenue streams of the property, which in turn increases the value of the property. And they will answer any and all questions that you have about that particular property. Is there anything I left out, guys?
No, that's exactly what you said. Yeah, this is a very good opportunity to have a very close interaction with us. You can look at the property firsthand. We came from a similar background where we had no real estate experience, and now we are in a position to kind of share our knowledge and our learning so far. So yes, I would highly recommend if somebody's interested to please join the trip.
Yeah, if you want to be a part of the Expo, if you want to be a part of the Masters Road Tour, all you need to do is go to lifestylesunlimited.com. All the information is right there on our website. You can get signed up right there. If you're thinking about doing the Masters Road Trip, you probably ought to get signed up as soon as possible because that thing always sells out, and we always have people that are disappointed because they waited too long in order to buy their tickets, and the tickets are gone. So tell me a little bit more about your strategy. Now, you've got 68 units. It took you 7 months to, refine that property and get it to that point where it's stabilized. How is that property producing right now for you and your investors?
Sure. So when we took over the property in 2019, the NOI was close to $288,000. That's what we took in at a cap rate close to 6.5. And we since 2 years now, we have made in terms of our operational efficiency increases, in terms of reduction of the payloads, reduction of the repairs. And me coming from IT, we both came from IT, we could shave a lot of cost. I have seen some people paying so high amount in the name of IT, so we directly made that line equal to zero. So in that scenario, we were able to increase from $288,000 in 2019, and right now we are standing close to $370,000 of NOI.
And when we come back from the break, we're going to translate that for you. Stick around.
Warning. Listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the show. Hey, just want to remind you that you can go to lifestylesunlimited.com. You can get all the information about our expo. You can get all the information about our Masters Road trip so that if you want to sign up for both of those events, you can. And in doing so, you'll have an opportunity to see the 68-unit property that TK and Amrit have basically recreated. Yeah, so they took a property that was a little tired. It was a little old. I mean, there wasn't anything really terribly wrong with the property, but it just didn't compete very well in the marketplace. So when they zeroed in on this particular asset, they realized that there were some economic things that needed improvement. There were some physical things that needed improvement. They had to do some interior rehabs on the property to make it competitive again because this property was a little tired. Its glory days were in the rearview mirror. So as we were going to break, I asked Amrit about what's this property doing for you. So Amrit, will you walk us through the net operating income formula and explain to us how the value was at one place when you bought it and what you've done now to change that valuation?
Sure. So when the time we took over in 2019, March 2019, the NOI, net operating income, was close to $288,000. And since then, today we are standing in June of 2021, we are able to increase that to close to $370,000, which is close to 30% increase in the net operating income. And given the cap rate of, we bought the property as close to 6.5 cap rate. And now the market, due to the demand and due to the Dallas-Fort Worth being it has now kind of compressed to 5.25%. That's a number ongoing we are hearing. It can be even lower than that. So that translates to close to 92% return. So in terms of absolute dollars, we have increased the valuation of a property more than $1 million since we took over. And that's our value we're trying to return back to our investment, our investors, in case we plan to make a sale.
Okay, so let me just put it in perspective. March of 2019, you acquire this property. You bring some other Lifestyles Unlimited members along with you, maybe a guy like me. Let's say I put $100,000 into the deal. Now, I did not do that, and I'm not invested in this deal. I will be very, very clear. Essentially, what you're telling me is that you have increased the value. So now my $100,000 is really worth $192,000?
That is correct. So if we do a hypothetical sale today, I will give you back $192,000.
Wow, and you've done that literally in 26 months.
We have done close to 2 years, yes.
Okay. So are you comfortable talking about the future projection for this property?
Yeah, the future projection, we have a model, and I keep updating this model based on how the market is trending. So the thing for our advantage is the location. Haltom City is one of the market which is doing exceptionally good. Even during the COVID scenario, we were always able to maintain 100% occupancy. So since the submarket is so strong, it helps us to increase the NOI as well as demand what is called as a low cap rate, basically compressed cap rate, so we could even demand more. So our projection is that if we keep going this rate, then with the same cap rate, we will be able to do 112 to 115% by next year, and it so on will continue.
So what's the exit strategy for this property?
Our thinking is that we will most likely do a sell, and we will look for the right time. We have to take a approval vote from our investors. They have to agree with our plan. But our strategy is most likely sell. When do we sell? We have not actually thought about it. But during the initial plan, we showed sell between 3 to 5 years. So somewhere in that window, we will look for opportunity to sell, meeting our return projection.
Now, you didn't stop at the 68-unit property. You guys went bigger for your next deal, correct?
Yes. So last year, end of year, that is 1st of December, we acquired our second property as a lead, which is a 152 units in Garland, Texas. It's Class B- asset, very well located. We are in the process of rehabbing it, bring it to the level where we can call it a stabilized. So we are still working on it. That's our second deal, and TK and TK is spending most of the time over there.
So you doubled in size. How much more difficult was it to buy 152 units as compared to 68 units? Since the model is exactly same, we understand how to evaluate the properties, and like TK said, we have a checklist which has to be met in order for us to go for the property. So we were looking again something smaller in the range of 100 units. We were sure we want to go bigger than 68 units. So our range was more than 100, and this 152 units was meeting all the criteria. It had meat on the bone. It was 1970 build property, and the ownership had it for almost 27 years, close to 30 years. So at some point they just stopped looking at the property at all. So it was good opportunity for us to again use the same what we did for Haltom Oaks to bring the operational efficiency, bring it back to the market rents. So this second property was kind of fitting everything we needed from the day one, and it has already actually beating our projection itself. So we are pretty happy with that deal as well. So is this more of a value play, or is this a hybrid or a yield play? What is this kind of deal?
So we call it a hybrid with value add, because once the time we positioned this second property, we were positioning as a hybrid, which means we will do cash flow very early on. In fact, we might do a cash flow in next month or so, which is almost 6-7 months into the deal. But the value is we found a few hidden opportunities that didn't show up when we went the feasibility. We were able to convert a space next to the office to an additional unit, so that has increased our NOI significantly. And then we also own our laundries now, so we took ownership of the laundries. We rehab that, so that is another opportunity which was not very clear once we took over, and hence there is a value added component which came in.
So how long is it going to take you to get to stabilization on this property?
We are guessing around month or two. We are almost at the tail end of our exterior rehab. Actually, TK has designed the signage and everything, so that is installed. We have finalized our interior rehab. What we want to do, like I said, interior rehab is not a single day. It continues for many years. So we have established our how we want to do the interior rehabs. We have converted the unit next to the office into operational unit. So I would say we are almost tail end. So I would say another month or two, and we have maintaining the occupancy since. So we took over that property at 88%, and we are hovering around close to 97%. So we are maintaining 95 plus since past couple of months. So I would say in a month or two we should call it stabilized.
I'm guessing you guys are not afraid of COVID.
No.
We are fully vaccinated, so...
Oh, okay. I bring that up because, well, everybody knows what our country has been going through and what we're trying to get away from. And I bring it up because not only do you buy a piece of real estate designed to change your future, and you do all the things you need to do, and you position that asset for great things in the marketplace, and then COVID hits and everybody kind of goes, what's going on? But you guys made it through just fine. You did just fine, 100% occupancy on your properties. And then you go and you buy a 152 unit, well, technically 151 unit deal, and you do this at the back end of 2020, and you're just like, no big deal, right? Am I calling it the way I'm seeing it?
Yeah, we were a bit fortunate there. Yes, and a lot of hard work. Yeah, we were always scared about COVID, and we were talking to our mentors all the time. How do we handle the COVID scenarios? I guess the advantage for us is the location of the property is awesome. So both of the properties, fortunately, are on a right location, and we focused on our marketing aspect more during the COVID. That how do we keep the market? We were very sensitive to our residents, and if they couldn't pay, and we can right now there's this Texas relief fund ongoing, so we are working with them to get them all the funding they can.
Amrit, I got to let you go, buddy, because we're at the end of the show. I want to thank you and TK for coming on. I so much appreciate your information. If you want to get started, go to freeworkshop.livestream.com.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.